The markets have been beating with a perfect Hurst cycles rhythm recently, and in today's market update we're going to be taking a look at what we can expect from the markets that we have been tracking recently over the next several weeks. We're going to start, as we always do, with the S&P 500. This is SPX data, and the important points about this analysis, as you will know, because we have been watching exactly this analysis now for a few months, is that we have an important cycle trough that formed in early April. You can see that it has been phased as an 18-month cycle trough, but there is the possibility that it could be an even greater cycle trough. That has, of course, caused the recent bullish price action. We also identified an 80-day cycle trough forming over here in the third week of June, and we discussed this cycle trough in our previous market update. This orange dashed line is the composite model line, which is a tool in Sentient Trader software that takes all of the cycle analysis that has been performed, and in the past it recomposes that cycle action, including the cycle wavelengths and amplitudes that have been calculated, and it shows us what would have happened in the past if the only thing influencing this market would have been the cycles themselves. You can see that the composite model line in the past fairly closely matches the price action. There is, of course, some variation because of other factors that influence the very dynamic markets that we trade. The composite model line then projects the cycle wavelengths and amplitudes forwards into the future to give us an idea of what the analysis is telling us to expect. The composite model line is a very useful tool for being able to interpret the results of the Hurst cycles analysis. If you're an experienced Hurst cycles analyst, you will be used to reading the diamonds and circles and whiskers and these nests of lows at the foot of your chart, but if you are new to Hurst cycles, the composite model line does that job very well for you. You can see that the next thing that we are expecting to happen in the S&P 500 is a 40-day cycle trough. This is the nest of lows for that 40-day cycle trough in about the third or perhaps even the last week of July. And then we have an important 20-week cycle trough occurring over here in about the third week of August. You can see that reflected in the composite model line. The composite model line is showing us that a peak for the current 20-week cycle should be forming fairly soon. Price is going to come down into a small trough. That is, of course, the 40-day cycle trough that we are expecting fairly soon. Then we're going to get a bit of a bounce out of that 40-day cycle trough before price again comes down into this 20-week cycle trough. When we are projecting into the future using the composite model line, it is more important to consider the general shape of the price move as opposed to the actual price levels. Because of the principle of variation, we know that the amplitude of cycles and also their wavelengths are going to vary. Particularly their amplitude is going to vary. And so projections in terms of price based on the composite model line are not very reliable, but the composite model line is very useful in terms of providing us with a clear idea of what to expect. Now, I mentioned that these cycles have been behaving perfectly. They've been beating with a perfect rhythm. And the best way of demonstrating that is to display our future line of demarcation, the FLD. This is my favorite cycle tool, as you are no doubt aware. And the 80-day cycle trough following an important cycle trough of at least 40-week magnitude, which of course we did experience in early April, the 80-day cycle trough is expected to form at about the time at which price finds support at the level of the 80-day cycle FLD. And here, this cyan-colored line or pale blue line is the 80-day cycle FLD. If you go back and take a look at market update videos published in early June, you will see that we were expecting the 80-day cycle trough to form at about this level. The future line of demarcation, as its name implies, is of course projected into the future, and so we can see where it lies at future dates. Just as the 80-day cycle trough formed perfectly at the level of the 80-day cycle FLD, the 20-week cycle that we are expecting over here in about the third week of August, there's that nest of lows, is expected to form at about the level of the 20-week cycle FLD. Let me hide the 80-day cycle quickly. Here we go. So, following a trough that is of at least 18-month magnitude, which we have established this trough is, we would expect price price to form the 20-week cycle trough at about the level of the 20-week cycle FLD. That is why this FLD is so important to us at the moment, because we are soon expecting price to turn down and form this 20-week cycle trough. Notice how the composite model line, as a matter of interest, comes down, forms that 20-week cycle trough at about the level of the 20-week cycle FLD, seeming to challenge my statement that the price projections of the composite model line are not always as accurate as the general structure of the line. But the important thing for us to do is to keep our eyes on this 20-week cycle FLD. We will use our shorter cycle FLDs to confirm when the peak is in place, and we will track the progression down towards the 20-week cycle trough expected in about the 3rd week of August. Of course, cycles cause M shapes in markets, and so here is the M shape for this 20-week cycle. We have seen 3 of the 4 legs to the M shape. The 3rd one is still ongoing. We have not yet confirmed that that peak has occurred, although the composite model line would have us believe that it is expected about now, or might have just occurred in the week past. And then, of course, price is going to come down in the 4th and final leg of that M shape. This is not a balanced M shape, as you can see. That would be a balanced M shape. This is a very bullish M shape. Why is it a very bullish M shape? As discussed in previous market updates, that is because of the underlying trend, the pressure of these longer cycles. Don't forget that we have an 18-month cycle that is still pushing upwards strongly. Our 40-week cycle is also still pushing upwards strongly. It will form a peak at about the time that the 20-week cycle forms a trough. And so the pressure of those longer cycles is bullish, and that is why we have this distorted M shape, distorted in a bullish direction. Taking a look at the Nasdaq, we can see exactly the same thing. In fact, it's an interesting feature about the markets at the moment that they are providing a great example of the principle of commonality, that these markets move with a great deal in common. We have the same big magnitude cycle trough in early April, or at least I shouldn't say the same, because this is a trough of at least 40-week magnitude, and several weeks ago I did a longer-term view of these markets. I would encourage you to go back to take a look at that to understand the difference between the magnitude of that trough in April. It is nevertheless an important cycle trough that formed then in April, and the story that is playing out in the Nasdaq is exactly the same as it is in the S&P 500. We are expecting a peak of the 20-week cycle to form round about now. We have a 40-day cycle trough that is expected in about the 3rd week of July, or next week, and here in the composite model line you can see that trough indicated. Then we should get a small bounce out, not quite such a big bounce as we might expect in the S&P 500, because there might not be quite as much bullish pressure from this cycle trough. However, it is likely that the Nasdaq and the S&P 500 both experienced the same magnitude cycle trough in April. And so it is likely that the bullishness is going to continue in the Nasdaq as it is expected to do in the S&P 500. Price is then, of course, going to move down into this 20-week cycle trough, which you can see here in the Nasdaq is expected in about the 3rd week of August, perhaps towards the end of August. And that is the next move that we are going to be watching and focusing on. What about the recent perfect cycle action? Here you can see it happening. Here is the 80-day cycle trough, and indeed, price found approximate support at the level of the 80-day cycle FLD. Taking a look at the 20-week cycle FLD, again, we would expect the 20-week cycle trough to form at about the level of the 20-week FLD. However, that is only true if this trough in April is of greater magnitude than 40 weeks. In other words, if this is also an 18-month cycle trough as it is in the S&P 500. As I've just mentioned, in my opinion, that is likely, but we do have this uncertainty in the analysis of the Nasdaq, and so we will be watching the 20-week cycle FLD very carefully as price approaches that 20-week cycle trough to see whether the 20-week cycle FLD is going to provide support as it is expected to do in most of the other markets that we are tracking. The Australian market has also been a very interesting market to track recently, particularly because it has been less influenced by the news events that have affected the US markets of late. Here we can see the M shape for the current 20-week cycle. Here is the 80-day cycle trough that formed in the third week of June. You will notice that the magnitude of this trough in early April in the Australian market is of even greater strength. I've mentioned before that I work with a slightly different nominal model when analyzing the Australian market. Perhaps it's because it's on the other side of the world in the southern hemisphere, but this is currently phased at a 40-month cycle trough that formed in April. That has certainly contributed towards the tremendously bullish price action that we have seen in the Australian markets. Notice how price has not yet exceeded the high price preceding the 80-day cycle trough in the third week of June. That begins to ring some alarm bells for cycle analysts because we are always a little wary of symmetrical price action. And if I was to draw this M shape a little more carefully, you will notice a potential peak that formed over there, looking fairly symmetrical around this 80-day cycle trough. Symmetrical price action is something that cycle analysis constantly warns us of. If this turns out to be a symmetrical price action, then this move down into the 20-week cycle trough might be a nasty one. However, that is not expected. So let me clear that before you take screenshots and distribute those screenshots as a warning to Australians. That is certainly not what is expected here. There is the danger of that symmetrical price action occurring, but because of the great magnitude of this cycle trough, we are again expecting a distorted M shape, a bullishly distorted M shape to form for this 20-week cycle, as you can see is reflected in the composite model line. Instead of an entirely balanced M shape, which is what we would see in a neutral market, we are expecting the bullish distortion of the M shape. Nevertheless, the next thing that we are expecting in the Australian market is exactly what we are expecting in the US markets. We are expecting a peak to occur soon. It is going to be a peak of the 20-week cycle. It could be here or it could be here. We are expecting in between those two potential peaks a trough of the 40-day cycle to form, probably sometime next week. And then, of course, price is going to move down to form the 20-week cycle trough. I am displaying the 20-week cycle FLD on this instrument as well because of the fact that when the 20-week cycle trough forms, we would expect the 20-week cycle FLD to provide some support to price. Here you can see the composite model line slips below it, but don't take the price levels of the composite model line too seriously. Focus instead on the structure of the composite model line. What we are expecting, if this is a trough of 54-month magnitude that formed in early April, or 40-month magnitude because of the different nominal model, we are expecting the 20-week cycle FLD to provide support to price as the 20-week cycle trough forms. And so the Australians, as in every other market around the world at the moment, are expecting a peak to form soon, price to move down into a 20-week cycle trough. Keep your eyes on this 20-week cycle FLD for an idea of where we could expect that price trough to form. We've been taking a look at the DAX recently, and it has proved very interesting again as a comparison with what is happening in the US markets. Here we have an 18-month cycle trough that formed in the second week of April, or just at the beginning of that second week on the 7th of April. And here is our M shape. We have a much clearer and cleaner position for the 80-day cycle trough than we do in the US markets because of some fundamental interaction that occurred just after the formation of that 80-day cycle trough, in my opinion. I mentioned it in our previous market update. Here again, price is rising up to form the peak of the 20-week cycle, or the second peak of the 20-week cycle, this being the first peak. The second peak, as you can see, I think it just poked its head up above the previous level. We are expecting this peak to form. It might have formed last week, and of course the next price action that we are expecting is a move down into the 20-week cycle trough that is expected to form in the third week of August. You can see how these markets are all demonstrating the principle of commonality to perfection. They are in fact all in exactly the same stage. If you are trading in a different market, you are likely to find, if it is a stock market, that you are seeing the same analysis on your charts. Again, the 20-week cycle FLD is important to the Germans, and when the 20-week cycle trough forms, we would expect the 20-week cycle FLD to provide some support to price at the time that the 20-week cycle trough forms. I mentioned that we're seeing the same thing around the world. This is a market that we don't often watch. It is a market I'm very interested in. As a South African, this is the South African stock market, the all-share index from South Africa. And you can see that we have effectively exactly the same analysis here. We have an 18-month cycle trough on the 7th of April. We have our 80-day cycle trough over here in the 3rd week of June. Again, this market was not affected by the fundamental interaction of the news events that occurred just after that, and so we have a cleaner position for the 80-day cycle. Our composite model line is still rising. That is affected, of course, slightly by the exchange rate fluctuations, which we're not going to dwell on here. But again, we are expecting a 20-week cycle trough to form towards the end of August, perhaps even the beginning of September, and there is the 20-week cycle FLD, at which level we would expect price to find some support. We've also been looking at the Nifty recently. We have many Indians who are trading on the basis of Hurst cycles, which is very encouraging. The cycles can be a little more tricky in the Nifty because of the complications of exchange rate fluctuations, which are affecting that market, and various other factors that we won't go into here. But you can see that again, we have an important cycle trough that formed over here on the 7th of April. If you go back and take a look at previous market update videos, there is the possibility that that trough might be displaced by one 40-day cycle. But at the moment, this is looking very good because we have a clean 80-day cycle trough that formed over here. One might argue that that trough would be better placed over there earlier in June, but for now it is well placed, in my opinion, over here in the 2nd week of June. The composite model line gives us an idea of what to expect. You'll notice a slight displacement of these peaks relative to the actual price peak, indicating that it is possible that the Nifty has already turned down and has formed this peak and is already on its way down into the 20-week cycle trough. Again, that 20-week cycle trough is expected in about the 3rd week of August. Displaying the 80-day cycle FLD, you can see again an example of the perfect cycles, with price finding support at the level of that 80-day cycle FLD at the time that the 80-day cycle trough formed. What we are expecting next, of course, is for price to find support at the level of the 20-week cycle FLD. There is that 20-week cycle FLD. We are expecting price to find support at the level of this 20-week cycle FLD at the time that the 20-week cycle trough forms. And so if this peak has already occurred in the Nifty, which does seem likely, we are expecting price to come down to about the level of this 20-week cycle FLD. Bear in mind that it would be better to watch this FLD on the weekly chart. There is a weekly chart of the Nifty. Here is our nest of lows for the 20-week cycle, and here is that 20-week cycle FLD at that time. And so we are looking at price coming down to about this level on a weekly basis to form that 20-week cycle trough. Bear in mind what I mentioned, that this trough might be displaced to the left by about 40 days. So it is quite possible that we are going to see an earlier trough in the Nifty than we will see in the other markets. Nevertheless, this 20-week cycle FLD is going to be an important level to watch for the traders in India. Gold has been fairly tricky to perform an analysis on recently because of the fairly flatline approach that it has been taking. We have a definite wedge that has formed in the gold price. You'll notice this chart is a little more complicated than the other charts that we've looked at. The reason for that is because I'm displaying a dual analysis. There are two analyses on this chart. Up at the top of the chart is a peak-based analysis. That is an analysis performed on the basis that the peaks in gold are synchronized, which I should point out they often are. At the foot of the chart is the more usual trough-based analysis, which assumes that the cycles are synchronized at their troughs. I should point out that it is mathematically impossible for both to occur. If you don't understand why that is, I would encourage you to download the 10 Core Concepts document that there is a link to in the description of this video. There are a few important points to make about this analysis. The first is that we are expecting a big peak in gold. And as I mentioned in previous market updates, as I have been saying for a couple of months now, usually peaks in gold are very sharp and isolated. This is not really a very sharp isolated peak, because you can see we have several other candidates right up at just about the same level. Price is now rising up into an 80-day cycle peak, and it is quite possible that this big peak needs to be displaced to the right. If you don't understand why that is, then I would encourage you to study the process of performing a Hurst cycles analysis so that you can understand the analysis process and why it is that sometimes peaks and troughs need to be displaced in this manner. My confidence in the fact that this is in fact the 54-month cycle peak is not very high because of the fact that it is not a sharp isolated peak. I would not be surprised to see gold reaching up to a higher price, at which point it is expected to form that strong high magnitude cycle peak, so we need to be very aware of that. Notice something else that is happening in this analysis. The composite model line, which is composed of both the peak analysis and the trough analysis, is showing a distinct divergence from price. Notice how it matched price fairly accurately during this period over here, but during this period here we had price diverging from the composite model line. Of course, price did come down into this 80-day cycle trough at the same time that the composite model line was forming that 80-day cycle trough, and we are getting a bounce. But this kind of discrepancy between price and the cycle action implies that there is something wrong in this analysis. And what is wrong? The fact that this major cycle peak has already been positioned. That provides us with a warning that a bigger cycle peak lies ahead. And so I am going to be watching for the rise into this 80-day cycle peak, at which point I would not be surprised to see a higher price, and we are going to be watching out for the very big cycle peak forming. Bitcoin is another market that has been behaving perfectly according to Hurst's cyclic principles. It is an interesting reminder that Bitcoin, as much as it might be described as something entirely new and a disruptor in terms of financial markets, it actually beats with exactly the same cycles that Hurst discovered 50 years ago, and it behaves perfectly, which is an interesting consideration when looking at this new instrument. Here again we have an important cycle trough that formed in April. This cycle trough, you can see, is only of 40-week magnitude according to this analysis. We had an 80-day cycle trough that formed over here in the 3rd week of June. What are we expecting next? Surprise, surprise, we're expecting exactly the same thing as we are expecting in the other markets that we have looked at, apart from gold, and that is a 20-week cycle trough forming probably in early September. You can see the composite model line is showing a rise up to a peak which lies slightly ahead of us, and then a move down into this 20-week cycle trough. Notice that Bitcoin has only just today, I believe, achieved the target that we identified many weeks ago. I don't even remember when it was. It was probably sometime in May or perhaps early June that we identified a target of $121,000. Bitcoin has just achieved that target, and another way in which Bitcoin has been a perfect Hurst cycles instrument is in the way that it has been interacting with the FLDs. Here is the 80-day cycle FLD, which provided approximate support as it did in the other markets at about the time that the 80-day cycle trough formed. Where is the 20-week cycle trough going to form? We would need to look at the 20-week FLD, which is over here, and we are expecting price to find support at the level of the 20-week FLD at about the time that the 20-week cycle trough forms. And so that is what we are going to be watching with Bitcoin. I think it is useful to take a step back in Bitcoin and understand exactly what has been happening. According to this analysis, we have a 54-month cycle trough that formed in Bitcoin towards the end of 2022. We had an 18-month cycle trough that formed over here in August of last year, and here is that 40-week cycle trough that we identified that formed in April. This big 54-month cycle trough at the end of 2022 explains why we are seeing such bullish price action. We have had some very bullish M shapes, as you can see. The current 18-month cycle is now in its 3rd leg of this M shape. We are expecting a peak to occur at some point. That might not be very soon, but it will certainly occur before the next 18-month cycle trough, which is expected, as you can see, in early 2026. This 18-month cycle that started in August of last year and will end in early 2026 is expected to be less bullish than this 18-month cycle that played out from December of 2022 until August of 2024. The reason for that is because the longer cycle, the 54-month cycle, is beginning to turn down. And so a less bullish 18-month cycle is expected to play out. That doesn't mean that it is going to stop rising immediately, but we need to be standing by when this peak does form for a move down into the 18-month cycle trough in early 2026. I do hope you found this market update useful and interesting. If you have any questions, please put them in the comments below the video or join us on our Hurst Cycles Discord server. I look forward to hearing from you.